Hello everyone, welcome back to Brain Power Classes. Today we are going to start with Class 12th Economics Chapter 9 Money Market and Capital Market in India. So, before understanding the money market and capital market, let's first understand one basic thing. Think about it, every individual, every business, and every even the government needs money. So, a student needs money for education, a businessman needs money to expand the business, and the government needs money to build roads. So, hospitals, schools, and many other public facilities. This management of money is known as finance. So, in simple words, finance means the management of money. Finance includes the funds required by. So, in simple words, we can say that finance means the management of money. So, finance includes the funds required by individuals, businesses, organizations, and the government for different purposes. So, that's why finance is divided into three categories. You can see here Indian financial system. So, financial institutions, financial markets, financial instruments, and financial services. And the finance is divided into like personal finance, corporate finance, public finance. So these were the divisions of finance, and now Indian financial system that is divided into financial institutions, financial markets, financial instruments, and financial services. So the financial system is responsible for collecting funds from people who have surplus money and providing those funds to people or organizations that require money. Because of this process, wealth is created, industries grow, employment increases, and finally, the country's economy develops. Now, let's see the components of the Indian financial system. So, the first component is financial institutions. You can see here Indian financial system in that first is financial institution. So, second is financial markets, third is financial instruments, and the fourth one is financial services. So now let's understand what is financial market actually means. So meaning of financial market. Student, suppose you have 50,000 as savings, but currently you don't need this money. So on the other hand, there is a company that wants to expand its business but requires funds. Now the question is, how will your savings reach the company? Reach that company. So financial market refers to a market where financial assets such as bonds, stocks, derivatives, government securities, and foreign currencies are bought and sold. So let's understand this in simple language. Key, a financial market is not just a physical place, it's a system where people who have surplus money and people who need money come together. So, here different financial assets are purchased and sold. These markets operate with the help of banks, non banking financial institutions, brokers, mutual funds, and discount houses. So, remember one important point, financial market acts as a bridge between savers and investors. This is most important point. So without financial markets, it would be very difficult for money to move from one person to another in an organized manner. So financial markets are mainly divided into two types. You can see here money market and capital market. So the first is money market and the second is capital market. Since the part is about the money market, let's first understand it in detail. So let's first understand money market in India. Students, the word money market itself gives us a clue. Okay, it is a market of money. So it is related to money, but not for a very long period. So money market is a market for lending and borrowing short-term funds. Short-term means a period of 1 year or less than 1 year. Whenever banks, companies, or even the government need money for a short duration, they use the money market. Now, what is near money? Uh, just wait. The money market mainly deals with instruments known as near money. So what is near money? Near money refers to financial instruments that can be easily converted into cash wherever required. So example ले लो. Examples given in you can see here. mm, so examples take it key trade bills, government securities, and promissory notes, etc. So these instruments have three important characteristics. First, they are highly liquid, means anytime convertible to money, meaning that they can be converted into cash very easily. Second, they involve less risk. Third, they are easily marketable, which means they can be bought and sold without much difficulty. Because all these instruments mature within 1 year, they are included in the money market. Now, let's understand what is the structure of money market in India. So, the money market in India has dichotomous structure. The word dichotomous simply means it is divided into two parts, organized sector and unorganized sector. You can see here below. So the organized sector includes institutions that are properly regulated and supervised. So these institutions are Reserve Bank of India, commercial banks, cooperative banks, development financial institutions, investment institutions, discount and finance house of India, also known as DFHI. On the other hand, there is the unorganized sector. This sector includes indigenous bankers, money lenders, unregulated non-bank financial intermediaries. So, these institutions do not function in the same organized manner as the regulated banking system. Money market centers in India are Mumbai, Delhi, and Kolkata. They are located in there. So, now let's understand bit. You can see here the same explanation is given here also. Key organized sector. The organized sector of the money market consists of the Reserve Bank of India, commercial banks, cooperative banks, regulated organized sector of the money market in India, and same as now Reserve Bank of India. Now let's begin with the most important topic that is Reserve Bank of India (RBI). So every country has one bank which is known as the central banks. The bank controls and regulates the entire banking system of the country in India. Of the country. So in India, this role is performed by the bank, Reserve Bank of India, RBI. So the RBI is the Central Bank of India, and it is one of the most important institutions in the Indian money market. It regulates the money market and ensures that the banking system functions smoothly. Now let's understand a little bit about RBI. Let's go in little history. So the Reserve Bank of India was established on the recommendation of the Hilton Young Commission. The legal foundation of the RBI is provided by the Reserve Bank of India Act 1934. So although the act was passed in 1934, the RBI actually started functioning on 1st April 1935. At the time of its establishment, it was a private shareholders bank. Later, on 31st January 1949, the RBI was nationalized, which means it came under the ownership and control of Government of India (GOI). Now, today, the RBI is considered the apex institution of the money market because all major banks and financial institutions work under its regulation and supervision. Now, you can see the definitions of a bank. So, according to Dr. M.H. De Kock, so central bank is one which constitutes the apex of monetary and banking structure of the country. And according to Professor W.A. Shaw, central bank is a bank which controls credit. Now, let's begin with the functions of RBI. So, first function is issue of currency notes. Now, so first function is issue of currency. The first function of RBI is issuing currency notes. RBI has the sole authority to issue all currency notes in India except the 1 rupee note and coins, which are issued by the government of India. This helps maintain a proper supply of money and public confidence in the currency. Now, it is a banker to the government. So, RBI works as the banker, agent, and financial advisor to the central and state governments. It maintains government accounts, receives government income, make payments on behalf of the government, and also helps in managing public debt. Wherever the government needs financial advice, RBI provides it. Third function is its bankers bank. So just like we keep our money in banks, commercial banks keep a part of their reserves with RBI. Whenever banks face a shortage of funds, RBI provides loans and financial assistance. That's why RBI is called bankers bank. Next is custodian of a foreign exchange reserve. So RBI is responsible for maintaining India's foreign exchange reserves. It also manages the value of the Indian rupee in the international market and buys or sells foreign currencies wherever required. This helps maintain stability in foreign exchange. Controller of a credit. So, one of the most important functions of RBI is controlling credit in the economy. It regulates how much money banks can lend by using tools like bank rate, CRR, SLR, and open market operations. This helps control inflation and maintain economic stability. Next is collection and publication of data. RBI collects information related to banking and financial sector. After analyzing the data, it publishes reports and statistics which help the government and financial institutions in making important economic decisions. Next is promotional and developmental functions. RBI also works for the development of the banking system. It promotes banking facilities in rural and semi urban areas, supports agricultural and industrial finance, and takes steps to make banking services available to more people. Other functions include like RBI acts as a clearing house, which helps banks settle transactions among themselves. It also acts as the lender of last report, meaning if any bank faces a serious financial crisis, RBI provides emergency financial assistance to them. So these were the few functions of Reserve Bank of India (RBI). So students, see you in our next video. Thank you everyone. Keep learning and keep growing with Brain Power classes. See you in next video. Bye.